the Investor Connect podcast program. This is Paul T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Paul Martin with Investor Connect. Today we're here with Paul Sethi of 2048 Ventures. Paul, thank you for joining us.
Thanks for having me here, Paul.
Well, great. So what was your background before investing in early stage companies?
So going way back, I actually grew up in a family that was pretty balanced. My dad's worked for the same company for, I think, almost 50 years now. And my mom, on the other hand, she's had 3 or 4 careers, and the latter one being 30 years that were pretty entrepreneurial. So I kind of grew up in that environment where I felt like I wanted to be an entrepreneur and lean more in her direction. But my early professional life, ironically, I was a banker for a minute, and then in the public market side with a hedge fund where I focused primarily on tech for about 5 years. And then it was 2006 or so that I started poking around as both an entrepreneur and an angel. And initially as a founder in the online education space, focused on kind of corporate education. That was 2007 to about 2009. And then in 2010, with one of my close friends, ended up acquiring a division of a FTSE 100 company called Redbooks. And we ended up bringing a lot of technology into that company. It was a pretty data, but manually curated data company at the time. And then we ended up bringing in the former head of machine learning from a $1 billion New York-based company called FactSet, and ended up disrupting the sales intelligence space in a particular vertical, the marketing advertising vertical. Co-ran that, and as ventures go, the 7.5-year overnight success, sold that to a large private equity platform last May. And then along the way, going back again to 2006 or so, around that time when I first started as an entrepreneur, started as an angel and have been fortunate over that period of time, 12, 13 years, to be a first check investor in a number of extraordinary entrepreneurs, and some of that have become household names, on both the enterprise and consumer side, and then, a few unicorns as well, including, Flexport, SeatGeek, Transfix, Knotel, LearnVest, Vineyard, and a bunch of others that you probably would not have heard of. And then late last year, post Redbooks, which was the company I was running, decided to go full time into venture with my current partner, Alex, who was managing director of Techstars NYC for the 5 years leading up to late last year. So that's kind of me in a nutshell, my background.
Well, it sounds like quite a ride, and lots of entrepreneurship along the way, and lots of investing experience as well. So it's great to hear. So with all of that in mind, what excites you right now?
We're sector agnostic. We're actually geo agnostic as well. Aside from having maybe a slight aversion to the Valley, we tried to avoid actively sourcing from the Bay Area. But otherwise, we're really focused on founders. Always starts, and for us, in terms of our investment, the stage that we invested ends with the founders as well. So we're focused on tech-differentiated, tech-enabled companies and teams generally. But other than that, it's no particular sector or market that we pre-compute to, and that's really by design. We're both enterprise and consumer investors, although we feel like we'll probably end up shaking out a little bit more in the enterprise direction. But of the 10 plus investments we've made to date, there's a good mix of both. And then we're very geo-agnostic, as I mentioned as well, and we feel like founders are innovating everywhere, and capital tends to be a little lazy, especially at our stage. And then, there are geos that we just think of as emerging tech cities. And those are, cities where there have been many successful companies who are now spawning alumni who are founding teams. And then there's successful founders in those geographies that are supporting them. And we see that in cities like Austin and Boston. And then there are other cities where there's just great innovation forming within university hubs. And a good example of that's Waterloo. And then unique platforms like Creative Destruction Lab and Waterloo's sister, Toronto, where they're super technical teams as well. And then there are other geos where there's just tremendous corporate support across industries. And we see that also in cities like Austin, but then also in Atlanta and Seattle.
Well, it's exciting to see the rise of a new tier of startup hubs around the country, and it sounds like you're on the forefront of that for sure.
We're trying to be. So we've made 12 investments to date across 8 different geographies. So to be clear, we're based in New York. We've made 5 investments here, but then we're also investing very actively across geographies.
So for those new investors out there that want to go do angel investing or early stage funding, what would be your advice to them?
I think it comes back to the team. So it's focused deeply on the team that you're considering investing in, specifically why that team has a burning desire to disrupt in whatever space they're looking to disrupt in whatever product they have, why it's that, why it's this, that's their life's mission. And make sure they understand, those founders that you're considering investing in, that it's not a 2 to 3 year quick jaunt. It's a 7 to 10 plus year marathon to get to the ultimate success that you'd want to see as an angel or an early stage investor generally.
And so for startups who are launching their startup to begin with, what would you advise them to do before they go out to raise funding?
I think it's proving that you have a unique insight in the space you're looking to disrupt with the product that you're looking to disrupt with. Think about what you could build in a capital efficient manner to prove that out. Get some product in market and then iterate on it. It doesn't need to be the perfect product. Like the ready, fire, aim is perfectly fine as long as it's ready, fire, aim, and then continue to iterate. And then really thinking about the addressable market that you're building for. And I don't feel like it necessarily always needs to be the absolute largest. But again, getting back to having that unique insight on what you're tackling and why that's differentiated from those who have come before you. Because usually the idea that any founder has, he or she isn't the first one to consider biting that off. And so why is she uniquely positioned to do it? Why is he uniquely positioned to do it? And then really importantly, having a passion, a true passion for what it is that you as a founder want to build, because I think life's too short to chase something just for financial reasons or because you think there's something there versus having a true North Star and reason for wanting to disrupt there.
Well, you've had quite a bit of industry experience. How do you see the startup industry evolving today? What changes do you see coming up?
So I think there's a dearth of talent. And I think part of that talent shortage is just because, especially, and this is one of the reasons why we avoid the Bay Area in large part, because the big companies just paying so much to acquire talent and then retain talent that it's tough for startups at our stage, which is, seed and pre-seed. It's tough for them to recruit talent away. And at the same time, I think there's an abundance of capital. So you do have some more founders out there, but I think the founders are not necessarily building in the most capital efficient way. They're not necessarily looking to prove things before they go to market. So I think in short, as it relates to the abundance of capital, there's more dollars chasing a finite number of high quality founding teams. And I think there are a lot of founding teams out there that are just taking advantage of the capital surplus. So I think with us, I don't think it's a meaningful shift in the way we think, because our typical investment is $300,000 to $500,000. So we're looking for exceptional founders that are kind of more mature than to think of this capital surplus as lasting forever. Although to be clear, those who are in their 20s and early 30s, they've actually only seen the up and to the right over this past decade. And so they haven't actually felt the pain that you and I might have seen in 2000 and then again in 2008. And so as a fund, we're able to kind of sift through that noise and get to the heart of who has the true determination, that drive, the grit, the resilience to really build the company that they want to build. And then as a fund, we're the ones welcoming them in, and then we're welcoming other investors into rounds and being welcomed in rounds. So we don't feel like that capital surplus is affecting us so much as it's affecting slightly later stage and certainly in the Valley.
Well, so let's talk about your fund for a moment. What is your investment thesis for it?
So we're focused on tech differentiated businesses across geos, across sectors, verticals. We're investing at the seed stage and pre-seed stage. We're typically, again, writing $300,000 to $500,000 checks. And then we tend to be more helpful than other funds at our stage. And it's not just my partner and myself, but we have a differentiated LP base too. So rather than traditional institutional LPs, our investor base is made up of successful founders and VCs. So we have 50 plus founders of GitHub and MongoDB and MindBody and SendGrid and DigitalOcean, StubHub, Meted, PlateUp, Seamless. It kind of just runs the gamut across industries. And then a bunch of VCs, including the GPs and founders of Andreessen Horowitz and Bloomberg Beta and Union Square Ventures and RE and a whole host of others. And so we want to be the ones that invest in tech differentiated founders and then bring as much value as we can. I like to say that we want to be the ones who are augmenting the superpowers that we believe our founders have. And we're always the non-interfering, most helpful type.
So are there one or two startups that you can call out that really fit that thesis well? You've mentioned several, but if you had to pick one or two, which ones would you choose?
Oh, yeah. So I was actually mentioning ones that I'd invested in prior to 2048 Ventures, but happy to mention a few that we've invested in here at 2048 Ventures, which we're already incredibly proud of. So And it'll kind of give you a sense of the range of technical types of companies that we invest in. Some are not technical at all and others are very. So I'll start with the least technical ones, but ones that we believe have incredible impact. So there's one called Lantern, and they're building kind of like the Zola, which is in the wedding space. They're building the Zola for end of life planning, which is a very large space and one that people are just not catering to today. Another one is building a social platform for a remote workforce, which we feel like is a big trend. Lots of big companies today are building remotely, and we think that'll continue because it's becoming harder and harder to recruit the best talent in one geography. And so we feel like that'll be interesting and have a lot of legs. Then starting to get a little bit more technical, there's another focused on drone logistics. They're building the super highways in the skies for drones. That's called Airspace Link. We have another one that's focused on protein sequencing called NPlex. And then another one that may be the most technical and the most ambitious, Humane Genomics. And they're a founding team that's looking to cure cancer eventually in humans, but starting with dogs, the canine space initially.
No, it's not like a great group. So you see a lot of startups out there. What do you think the challenges are that startups face today in getting their company off the ground? Is it regulatory? Is it the market? Is it the technical? What do you think is the major hurdle?
I think it's really coming back to the talent shortage. It's recruiting and retaining talent. That's the toughest for all. As founders, you need to be able to identify the people who share the passion for your vision. And that's something we optimize for. Founders, we believe, that can attract and inspire the absolute best teams, because otherwise you'll be caught executing on your own vision, but not being able to actually scale and grow and really build upon that vision to create a grand and exceptional company.
Well, that's great. So if you had to pick one or two sectors or applications out there that you think are immediate opportunities for investors to pursue, what would you call out as the top first or second to look at?
So I think that definitely companies that are looking to build for remote workforces, any kind of tools or platforms for them, I think that is a very interesting one to us generally. So I'm going to give an example of pre-2048 ventures and the way we view the world even here. And it's that we're not pre-computing again because we want to focus on the founders first. They come to us with ideas that they're so passionate about and that they want to disrupt, that we're not interested in particular sectors and then finding entrepreneurs. We want the founders and entrepreneurs that come with that passion and what we hope to be founder market fit to really execute in that particular sector vertical, and with some, like I said earlier, some unique insight. And so, when I was investing as an angel, I wasn't actively thinking about investing in the logistics space. But fast forward, this is now going back to 2012, 2013. Within a 24-month period, I'd probably met with 25 or 30 companies across various pieces of the logistics space. And today, 2 of the 5 top performing companies in my portfolio happen to be in the logistics space. And then I have a handful of others that I feel like will also succeed. And so that just goes to show that you don't want to have any tunnel vision or any preconceived notion as to which sectors will be ripe for disruption. I think a lot of that signal comes from the best of the best entrepreneurs and meeting with them, spending time with them, and then sifting through which ones can be truly extraordinary in the way they think about that vision, that insight that they have, and then how they could actually execute on that in a unique fashion as well.
Well, that's very insightful. Thank you for that. In the last few minutes that we have here, what else should we cover that we haven't?
I think you covered everything.
Well, great. Well, how best for listeners to get back in touch with you?
Email is always good. psethi@2048.vc. And on Twitter, we're at 2048VC. And I'm at Paul Sethi.
Well, great. We'll put those in the show notes. Thank you for joining us today and hope to have you back for a follow-up soon.
Thanks again, Hall.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.